Imagine this. You pay school fees for a needy, bright child so that they can get a chance to education. Or you hear of a story, someone that you know has been discharged from hospital, but they don't have enough funds to clear the bills, and you decide to step in the gap. Or maybe is someone that you know, a friend or even a relative, who is suffering from a dangerous and a terminal disease like cancer, and you organize a fundraiser for them. And in the process, you contribute heavily, and it is not you who is paying, it is your company that is paying this money. So at the end of the year, when you are filing tax returns, you compute all these expenses that you incurred in form of donations, and you deduct them so that you can arrive at the taxable profits. Then, shock on you, you get an additional tax assessment from KRA claiming that you did not file your taxes properly. You get shocked because you want to show them, to demonstrate to them that in fact you did pay. You get your bank statements, you get all the evidences that you can be able to gather to prove to them that indeed you incurred that expense. But KRA, they stand their ground. They tell you, we are not going to hear anything about any expense that you paid to a needy, bright child, or you cleared a hospital bill, or maybe you organized a fundraiser to someone who was suffering from a terminal disease. We don't. And you are wondering, how can KRA be this inhuman? How can they not understand that we live in a society where we need to help one another? And KRA comes back to you and they explain to you a very simple concept, that only expenses that have been used wholly and exclusively in the purpose or in the process of generating income should be deducted when arriving at the taxable profits. Only expenses that have been incurred wholly and exclusively in the process of generating income should be deducted when processing or computing the taxable profit. And they say, donations, you meant well, and we feel you, we hear you, we notice you, but unfortunately, donations do not qualify as a deductible expense. So KRA comes in. What do? They disallow all those expenses that you had claimed with reference to donations. They add them back to the taxable profits, and they recompute your taxes again. And by this time, they penalize you. They give you fines. They slap you with interest for misunderstanding this rule, that not all expenses that your business incur are tax deductible. Not every other time you spend money, your company's money, that you should consider that as a deductible tax expense. And maybe there is some truth in that, because KRA, the tax profits, KRA is entitled to 30% of it. Imagine this, even where you stand. I owe you some money. Let's say I owe you 100,000. Yes, you give me some money, I owe you 100,000. Or you did something for me, you offered a service. Then at the end of the year, I tell you, you know what? I did make a donation to a child who did not have school fees, and he was at the verge of not being allowed to do their national exams. Or there is this patient who had been discharged by the hospital and they did not have enough funds to clear their bills. Or I did a fundraiser to a cancer patient and therefore I paid all the 100,000 that I owed you. What do you say about that? Would you be happy? And therefore, the same pain or the same kind of an attitude that you would have about that, saying that, no, it was my money, it was not your money. You did not have the authority to use it on my behalf. So I am demanding you still give me my money. Is that okay? If that is okay, now put yourself inside KRA's shoes. They are saying the same thing. Before you make a donation somewhere, can you agree that you play by our rules? Just donate your money, not our money. Because when you donate the whole of your profit coming from the business, it means that you are leaving nothing for KRA, and KRA does not want that. So that's why if you claim any donation as a valid expense, KRA will disallow it. But let me say this. There are some organizations that are entitled to receive donations, and KRA would recognize that donation as a valid expense for your business. For instance, if you donate funds to Red Cross is a registered NGO here in Kenya, and therefore, since it is well known by the government of Kenya, if you make any donations to Red Cross, that expense will be tax deductible from your company. If you make a donation to a church, but not any church, a church that is registered here in Kenya and whose PIN certificate has been approved for tax exempt status, not any church. If you donate as well to an NGO, nowadays NGOs, non-governmental organizations, the name changed. They are referred as public benefit organizations. If you donate funds to such an organization that has been registered here in Kenya for purposes of alleviating poverty or maybe fighting climate change, it is recognized by the government of Kenya. That donation will be tax deductible. But not churches, not all NGOs that are registered in Kenya make such a donation to qualify for tax exemption. That NGO, that church, the PIN, the KRA PIN for that organization must have been approved for tax exemption status. And it is a stage, it is a process that a church has to undergo. It is a process that an NGO has to undergo. So not all NGOs are registered for tax exempt status. So now, to avoid any drama, any confusion, any additional tax assessment coming your way, always ensure if you want to treat a donation as an expense that is deductible for your company, number one, always ensure that you make donations to only registered NGOs and churches and whose PINs, KRA PINs, have approved for tax exempt status. Not all churches, not all NGOs have their PIN approved for tax exempt status. So always ensure that you confirm the KRA PIN of the organization that you are donating to. Number two, you need to get a receipt from that organization, and of course an ITIMS receipt, indicating that you indeed contributed or donated that money to that organization. The PIN should indicate the name of the organization and that is tax exempted for income tax. Number three, you should be able to indicate the date when you made that donation and the amount, and of course the purpose why you are doing that donation. Once you have been able to meet all those conditions, then for sure you can use you can claim the expense that you incurred as a donation validly as a tax deductible expense. So in short, in summary, before you decide or you classify a donation as an expense, ask yourself, did I donate to a child who was needy and was almost being denied the opportunity to do KCSE or KCP? Or did I contribute to someone who was in the hospital that was discharged but did not have funds to clear the bill? Or maybe a cancer patient? All those are tax those expenses are not tax deductible. But if you contributed to an NGO or a church, and these institutions, they have their KRA pins approved for tax exempt status, and they gave you a receipt, then you can proceed to deduct that. Always ensure that you are able to differentiate between donations that are treated as deductible and those that are not deductible, so that you can protect your business from unnecessary additional tax assessment coming from KRA. Because when that happens to you, it leaves your company with so much financial pain in terms of penalties, fines, and interest.